What's up, everybody? This is Jimmy with Trade Decoded. It is April 24th, 2025, and the stock market is happy today. And when the stock market is happy, a lot of the community members and people who trade it are also happy. Whether it goes up or down as day traders, we really don't care. I know that pains some people with long-term investors, but we make our money when the stock market moves up or down. It doesn't matter. With that said, it's very rare that we get nice, clean moves that sustain themselves for as long as this morning's uptrend did, which is rare in these markets lately. But with that said, if you were on the right side of it for the right reasons, you got to take a very nice, comfortable ride to the upside that paid you handsomely well, unless you had a put bias, which we did have a couple people in the community that had a put bias. And fortunately, they either rolled over and decided, let me play with the chart, or they didn't trade at all, which is a big thing you have to be aware of. If you have a bias, it's okay. Just don't trade it on an uptrending day if you have a put bias. With that said, I took one single trade. We found several great opportunities today that we'll cover, and then we'll just move forward from here. So let's take a look. In the open, it was a little bit hard to be comfortable picking a direction. But at 925, we had our call line, 456.20. We had our put line, 455.33. We were only looking for about a 50-cent move up or down, depending on which one of those lines got taken out. Now, because of this weird situation leading into the open, I only picked being prepared for calls because of this higher low right here. Now, I told everybody this morning, I don't really like the price action leading into the open. I will be prepared for calls. However, it's likely that I'm not going to aggressively get into the call or put scenario today. Okay, just because pre-market didn't have me feeling really good. I don't have a put bias. I don't have a call bias today. Now, the majority of the top 10 was green today, so I did, and I openly said I would prefer to play calls today because the market's telling me it wants to go up, but I still need evidence that it's going to go up. And so we don't have that usually before the market opens. It's impossible, right? Now, my futures traders, they got to take advantage of some nice moves. And we did have some people play the call scenario because we did get above the call line and we held it as support and we wanted to get to the next line, all of which happened. Admittedly, I did switch over to being ready for puts when this candle started printing big red. SPY was rejecting resistance and ADD was printing red. I still told everybody, I still want Qs to break a couple of supports before I'm willing to jump into puts. So I wasn't aggressively trying to get puts. Once we've established this support right here on the Qs and started to, whoops, I didn't mean to move that, and started to and put in a higher low right here, I told everybody, first of all, our stop loss for anybody who was in puts at the resistance up here, because ADD was printing red, and I told everybody, SPY and Qs are at resistance, ADD is printing red. If you're going to take this risk, you want to hope to get down to our call line. That was the support that we had at the time. So some people did make money on puts here, but it's a counter trend trade, so we always consider getting out at the first line of support on the way down if we're going to take that risk, okay? I did not. I actually waited. This is an eternity for me to wait before I take my trade. But what changed? Well, we held support, struggling to get through it. We put in a higher low on both charts at 938. ADD had started to move back up. We broke resistance right here, and that's when I told everybody, I'm good for calls now. Let's go. I got in one candle too late. Normally, I would have been happy getting in 1 minute before I did. But instead, I aggressively got in shortly after this candle closed. There was room to get to resistance. ADD was printing green. SPY was breaking through resistances. I was okay with it. We got in. We made it through that resistance up to the next resistance where we did struggle a little bit. ADD got a little bit slower. I even contemplated getting out of my trade here. In fact, I was telling people, guys, I'm up a good amount of money. I'm happy with what I've done. Just know, put a stop loss in place. Otherwise, we can hope for the best, plan for the worst. As I was saying that was right between 944 and 945. We got a nice push up. In fact, I was having the conversation at 945. We got a nice push up. It brought us right up to the next resistance where I said, I'm taking myself out of this trade. Qs and SPY are both now at resistances. I'm just going to get out of the trade. I was up 34.5% at that point. A good winning trade for me it was. And I was in and out of the market making what used to take me, sorry, I got to stop my camera from moving, 4 weeks. Used to take me 4 weeks at my day job to make the same money that I made in those few minutes right there. With that said, some people had a difficult time being comfortable playing calls. It's understandable if you have a put bias and if you didn't get in prior to this move getting bigger, right? Because the more it goes up, the more we feel that the minute we buy, the more likely we are to turn around and go the other way. It's a real problem. It's a real feeling. It's something that a lot of traders, including myself, feel. If I didn't get in when I did up here, I'd have a much more difficult time, even though the chart was screaming at me, Jimmy, calls. I even said when I got out of this trade, guys, there's no real good reason for me to take my profits right now. I was very much in profit. I tell everybody along the whole way up, every time we close above a line of resistance in calls, that line needs to become your new stop loss. So if we close back below it, get out of the trade. That didn't happen until all the way here. So I left a buttload of extra money on the table. This turned into an over a $20,000 trade if I would have just held it all day long. That's not going to happen. That's just the way I do it. Am I upset? No, because I don't forget where I came from. Okay, I don't forget where I came from. And this is way more than my daily goal. This is way more money than I need to make to pay my bills and support my family. I don't want greed to become a problem that I have to deal with. So I try not to be greedy. All right. With that said, we had a pullback to support on both charts with ADD printing green in an uptrend. As long as we stay above that green line, stay in the trade or take the trade. Another pullback to support on both charts with ADD printing green. Let's go. Where are we going? To the next resistance. If we get through that, the next resistance. If we get through that, the next resistance. If we get through that, the next resistance. We didn't get through that. And when we got up here to this resistance, lo and behold, we had SPY, not quite to resistance yet. It got closer to it on the next candle, but ADD was already on its second, pushing its third red candle. So again, we were just looking at weakness in ADD, although ADD was very, very green for the day and continues to get more and more green. So puts are not a thing we were actively trying to find. Long story short, this is a trade setup that we normally like to take that did not work out. Okay. Now we weren't advocating for puts because the market seemed to be very strong. However, I did have some people that wanted to play puts. So we talked about the idea of what our normal rule are for puts. Number one, we want to close on the other side of the trend line. Number two, we want to close below the most recent support having broken the trend line. That all happened right here. With that said, we were hoping to make it down not to this support, which is where it stopped, but down to the next one. So this trade did not work out. For the one, I think there was only one person who was looking for puts, maybe two, that took this, and they quickly stopped themselves out of the trade because once we get back above the support that you were hoping to break, that's your stopping point. Now we did come up, we put in a lower high. Great. That usually means we're going to move below support. It didn't. Instead, we put in a higher low. So what do you do in this situation? If you're in puts and we put in a higher low, you want to consider getting out of them. If you're in calls, when we put in a lower high, you want to consider getting out of them. The thing we don't know is what the result of those two things are going to be. We don't know who's going to win that fight. So if you're not in a trade, we don't get into trades during a wedge. If you were in a trade, your stopping point needed to be when it was clear that the normal thing that happens, probabilities wise, doesn't happen, we get out of the trade, right? Don't become a hold and hoper. With that said, we continued with a break of the wedge to the upside. Now, normally the rule is if we break the wedge to the upside and there's room before the next resistance, you could take that entry. Otherwise, you got to wait for the break of that resistance, then you get in. So the opportunity to get in would have been here. we would have been hoping to at least make it to the next line, which it did. We would have been hoping then to move up to the next line, which it didn't. We didn't put in another higher low. So new trades could have got in here. Higher lows were more likely to break resistance. There's room to go to the next resistance, so on and so forth. We did have people take this trade. And when we get to the pink line, as with any time we get to any pink line on any chart, I always recommend tightening up your stop losses or taking your profits. Pink line is the stink line. It's the most important line on the chart for me. Doesn't have to be for everybody. Now, if you got out there, you were unhappy 2 minutes later, but then you were very happy 3 minutes later. So you can't cry over spilled milk, guys. We don't know what's going to happen when we get to these levels. That's the fact of the matter, but we can be prepared in case what we hope happens doesn't. We don't lose too much money. And if you follow the rule of if we close above resistance and close back below it, that's got to be your stop. So no matter what, you would have been getting out around the same time that I was suggesting we consider getting out in the first place. We pulled back. Yeah, there was no trade setups here that we were talking about at the time until we started to put in higher lows again. Higher lows are bad for puts. What we're waiting for now, and I had said this right before, like 2 minutes before it happened. In fact, funny story over here. It was 9:41. We had just come off of a lower high, and I told everybody, and you won't believe me unless you were in the room today. I said to everybody, I said, guys, I feel like an FU candle is about to show up. 2 minutes later, massive, quick FU candle to the downside for anybody. So 2 reasons to get out of calls here. If you didn't because we were at the pink line, and you didn't because we stopped below the pink line, or you didn't because we put in a lower high, my intuition is not enough to get you out of a trade. Your feelings shouldn't matter. But there was 3 reasons to take profits in calls no matter what. So you wouldn't have had to deal with this right here. Now, we did have some people, against my better judgment, get into puts because of this lower high. Now, again, the market was very, very strong today. So we weren't looking for aggressive puts. But lower highs, not good for calls. Usually means we're going to break support. And, well, the FU candles have become a pretty normal thing these days. It's just crazy that it happened 2 minutes after we were worried about it. But nonetheless, it did find some support and started to make its way back up to the top. We got back to the pink line. I told everybody, until we can cross over this resistance, I wouldn't be looking for calls. And if it happens, we should head up to the next line. We were aiming for this line up here on SPY. Qs and SPY both made it up to those respective lines where we struggled to continue to move up. And again, guys, after this, it's just following the same trade setups, right? We put lower highs. Lower highs are bad for calls, so we're not looking for calls here. In fact, we're supposedly going to be breaking supports. If we break support, we're looking to move down to the next support, which, by the way, we talked about this trade too. Lower highs, we're trending down. The support we wanted to break was here. Where's the next support down from here? It's right there. Okay, so if we break this support here, or you're anticipating this move to continue down, or you wanted to wait for a lower high, whatever the case is, it made it down to the next support regardless. Okay, and at this time, you have to be watching ADD for confirmation. So if ADD is printing green in a very green trading day, you don't want to take aggressive puts. It's just not a good thing, okay? Then we found ourselves in a wedge, and this is the trade we talked about right before I got off the mic. I said, guys, if we break this wedge high, you got to be careful because we have a resistance right here first, okay? So we weren't looking to get into calls because we broke the wedge here because of resistance here. If we get through that resistance, we know the next resistance is over here. That would be the trade. Well, as luck would have it, we broke the wedge, put in another higher low, got through this resistance, and headed right up to the next resistance. Excuse me. And that was the last trade we talked about. Now, as you can see, the market is still going up because it wants to go up. Okay, the market wants to go up, guys. It just needs some input. It wants to know. I was telling people today, I think that even if the market gets confirmed news, good or bad, I think it's going to want to go up. It's just the natural state of what the market wants to do. I believe we have found the bottom for this pullback, or whatever you want to call this correction. I think we found that, last week or a week and a half ago. I don't remember exactly what it was, but the market's always going to recover. It does 100% of the time. Is it going to be a bumpy ride as long as things are crazy the way they are? Sure. But for us day traders, it's a beautiful thing. We're trying to take advantage of these moves. And what we're trying to do in this room, in our community, and in this book right here, which you should buy. It's a great book. It's really good. It's got a lot of useful information in it. But the fact of the matter is, what we're trying to do, oh man, you guys can see my mic in this thing. What we're trying to do is get you prepared to properly see good trade opportunities before it's time to execute. That's what we're doing in here. I'm trying to teach you how to be prepared so that you know what you're looking for before it happens. And then after you execute based on what you were looking for, you know how to manage that trade based on sound, logical, useful information, probabilities. Our emotions will always play a role, unfortunately, in what we do and how we behave. There's no way around that. That's just a fact of the matter. But starting with knowing when odds are in your favor to even consider taking the risk of any trade is a huge benefit to making progress in this business. Okay? We don't gamble in here. We're not just guessing when we should be taking our trades and when we shouldn't. And the win rate of our community shows it. We were nearing 71% win rate as a whole. Okay? That's magnificent. I don't care who you are or what trading room you're in. We have traders that are well above 70% win rate. We have some people that are north of 90%. And there's a lot of reasons for why that's the case. Less trades. Okay, they're getting in, they're getting out, they're walking away for the day. It's a lot harder to lose money if you've already made money and you stop trading. All right, so if you found any useful information in this video, please like, share, and subscribe. If you'd like to join our Discord community, well, all the links for the book, Discord, everything is down below. I'd be honored to have you. Come use the free week. You don't have to sign up for anything. You don't have to take your credit card out. Do nothing. Just jump in the Discord. You don't even have to go to WAP to get the free access. You literally just go to Trading Decoded Discord and your week starts right then. Okay? If you like what you get for that week, consider becoming a paying member. If you don't, thanks for stopping by. I hope we were able to help you learn something you may not have known about price action or the way things move. All right? And also, as I've said before, check out my book. Buy it. It's a great buy. You can get the digital version now for only $10. There's a lot of good information in there. And we're going to wrap it up. I hope you all had a great day in the markets today. Until tomorrow, I love you.